What up, YouTube? I am your host, Marcus Maxey up top, Thomas Razor down below.
Yeah.
And we are back with another reaction video. This video here is recession is here. Prices are falling. I'm sure it's going to be a pretty good video. Much better than the last video that we did. And
this
I
was
don't
from
think it won't take
Grant. He's a good YouTuber. He knows a lot about financials and structures. He made a majority of his money off of real estate. So he started with the stock market, realized the stock market only grows the money you have in it. So he started working with business credit and expanding his empire through real estate structures. And at the time of this video, y'all are getting it a little later. If y'all want to get it in real time, go follow Razor's TikTok. But y'all getting a little later, and at this time, his net worth is currently $11.2 million.
Gotta love it. All right, well, we're going to get into it. We ain't going to hold you up too much longer. So, without further ado...
What's up, you guys? It's Graham here. So as of a few hours ago, the Federal Reserve just raised their benchmark interest rates by another 75 basis points, which means as of today, we are now sitting at the highest interest rates that we've seen since 2008. This also marks the end of the free money era that was started over 40 years ago, where every rate increase was unable to surpass the previous high before it. But now we've completely broken that trend and the money printer is officially turned off. That's why it's incredibly important to cover exactly what they say is going to happen throughout the next year, the biggest changes being made, what this means for you, and most importantly, how you could use this information to make you money. Although before we start, since the Federal Reserve just raised rates, it would mean a lot to me if you raised that like button and subscribed for the YouTube algorithm. Doing that helps out the channel tremendously and makes all the last minute reporting totally worth it, and as a thank you, here's a picture of Jerome Powell. So thank you guys so much, and also a big thank you to FTX US for sponsoring this video, but more on that later. Alright, now to start, all of this begins with the word investors hate, inflation. On a really basic level, this is simply the rate in which products and services increase in price over time, lowering the value of your money today. And recently, inflation has been the driver for every single rate increase that we're about to see. That's because when the Federal Reserve raises rates, they do so by looking at how much prices are increasing both month after month and year after year, and then adjusting those policies in such a way to bring those prices back down. In the short term, this means more pain in the markets, less demand for consumers, and according to analysts, a higher unemployment rate while fewer jobs are created. But in terms of what this most recent inflation report indicated, as well as its impact on the rate hike that we just saw today, here's what you need to know. The latest inflation report was released on Tuesday, September 13th, and to everyone's surprise, it was an absolute disaster. That's because inflation was largely expected to go down. After all, it had already decreased from 9.1 down to 8.5%, and gas prices were falling. So the expectation was that we should see inflation go down to 8%. But nope. Instead, that number was 8.3% year over year, with a month-over-month increase of 0.1%. This implies that inflation is not going down as quickly as expected, costs are continuing to increase throughout certain sectors, and even with energy prices having fallen, other categories are costing more, leading Americans to having even less money left over. Under this latest report, in just the last month, food and
So I'm here with the next level of crypto security, Arculus, a cold storage wallet that protects your crypto and secures your private keys.
Food and medical care increased by 0.8%, shelter is up another 0.7%, and new vehicle sales are still costing more than the month prior. On top of that, core inflation, which excludes food and energy prices, increased by 0.6% month over month, signaling that this isn't just a random anomaly and that prices are increasing above the Federal Reserve's control. Now, in terms of raising rates, the Federal Reserve has made it clear that they intend to continue their rate hikes to fight inflation until the job is done. And when is that, you might ask? Well, all of that has to do with what they call their 2% target. Even though you and I might see used car prices going up 40%, record high oil prices, and $2,000 median rent, the Federal Reserve has to balance the effects of maintaining maximum employment and price stability. After all, if they lower interest rates too much, then prices rise too fast. But if they raise interest rates too much, then unemployment increases. Because of that, there's a fine balance between making sure the economy is growing and making sure businesses are doing well enough to keep people people on payroll. That's resulted in a 2% inflation target that the United States, Canada, Japan, Sweden, and the European Central Bank have all agreed on. And what's even more remarkable is that the entire policy was simply the result of an offhand remark from New Zealand, who said that they wanted to target 1%, and then they rounded up to 2% to give a margin of error, and voila, the 2% inflation target was born. This set the expectation that inflation wouldn't be so low that people hoard onto their cash, but it also wouldn't be so high that people's savings are completely eroded away, and that is what the Federal Reserve is aiming for. The goal here is that they'll continue to raise interest rates, soften demand by increasing borrowing costs, let businesses contract, and then eventually inflation will return to its normal target. Now, the difficult part comes where if the Federal Reserve stops too soon, they might not make a lasting impact. But if they go too far, they could end up sending the entire economy into a recession, or even worse, a depression. Now, other investors like Peter Schiff believe that the 2% target is no longer going to be achievable.
Okay. I like. Who is this guy? What's his name? You're going to have to send me the information completely about this guy here.
Yeah. So what this means for us is the normal consumer, and I'll elaborate a little bit what it means because I'm a business owner as well. So as the normal consumer, right now, we're fucked. If I'm keeping it a buck. So they're jacking up the prices for a lot of things, as we've seen in the grocery stores. Shit, the price of cheese has went up. Like I went in and I was like, okay, I'm getting this Walmart cheese for like it was like $2.50 something before. It was like $4 something. I was like, dang, that's crazy. Okay, it is what it is. But it's like that on a whole bunch of items. So it's costing more to ship these items in because as the US, we rarely grow any of our stuff. We rarely get our stuff like US grown because it's cheaper to get from other places.
Right.
So we get bulk from like Mexico, Canada, China, and it's costing more to get that in, especially since the pandemic. And what everybody didn't realize with the stock market, when the government pumped the market with artificial stocks and then pulled them so conveniently recently because the U.S. was running out of money and we were falling deeper into deficit. So they faked that, and now the markets are feeling all those side effects from the pandemic now. Now, what that means for us as entrepreneurs, especially with it being a Democratic office, Democrats are usually not favorable towards entrepreneurs. Hence, I mean, as bad as Trump was talking about the speaking on issues, he was a Republican at the end of the day, through and through, and a businessman. So that 6,000-pound vehicle rule, and you also had where you could write off deductions up to, $400,000 for a home, under a business. So what these Instagrammers don't tell you is your business actually has to make that revenue though to counterbalance that. So yeah, it's just a lot. Honestly, I'm just waiting until the next Republican gets in house. It's not going to be hard with Biden doing the job he's doing right now. People are going to lean towards the Republican side to fix things, but it's been like that historically over all the presidencies. I think only 5 presidencies have went where they have a consecutive the Republican or Democrat sits in the office all 8 years. So it's always switched off. So I'm just waiting until the next one gets in and
see how that goes. See how that goes. But look, hey man, if y'all want to get the original link to this video, it'll be down in the description box below. Make sure you leave your likes, shares, and comments and all that good stuff on this video. Press that like button. And if you dislike this video, double tap that dislike button twice. If you want to enter in to get yourself a free pair of skates, make sure you comment Skate 2022 down in the comment section below. And subscribe to this video. And you have yourself a chance for a free pair of skates. These skates are valued at $400, but for you, they will be for the free not eat. You got Marcus Maxey up top. Thomas Razor down below. And that was another reaction video.